Hi, welcome to Wealth Spikes, empowering trading and investments. Daily we keep seeing about the market developments. What happened in the market? What were the good trades? What are the results that were now announced in the market? How did it impact the market? These were the things which we have been seeing all these days. Today, for a change, we'll see about an IPO. We'll see about OYO. We'll see the finer points, fiscals about this issue as such. Please do like, comment, share and subscribe. We want your support. If you are keen to know today's market happenings, you may ask me why you are not sharing the trades today and your recommendations today. All the trades and recommendations are there in the Facebook link given below the description. Please do join the Facebook link. You can see all the trades of the day and all the recommendations given for the day. It's quite exhaustive as usual, given in detail. Now we'll get into the OYO evaluation. Normally we fund managers and equity analysts evaluate an IPO before it comes out in public. But now, even now, prior to that, I am doing an evaluation purely based on the fiscals. This is more like a preamble than the actual one to come out. Now we'll get into the pointers. OYO IPO pointers. How far this IPO is strong? That's what we are going to evaluate now. Disclaimer, this is not an IPO review. That will be done separately, as I already told you. We are just now trying to see the overview of the current fiscals. OYO wants to raise $1.2 billion. And if you see the valuation, it's a very tall valuation, $10 to $12 billion. Even now, they are not making profit. That's one thing what you'll have to note. The advantage what OYO has is the brand equity, the visibility of the brand. OYO is visible everywhere, wherever there is a hotel property. Promptly display, their branding is quite strong in all the properties. That's one core strength what they have. Across all their hotel properties, wherever they have got their affiliation, brand visibility is quite high. Scale of operations, they have scaled up quite well. Throughout the country, they have rolled out. Money-making potential, that's something what we will see now. Abundant global opportunity. Yes, they have got huge opportunities outside India as such. And they have already started trying out this model outside the country. What they have achieved now, till date, 1,57,344 properties. Listed in 35 countries, not only India. They have already gone abroad also. In this, as such, if you see, 1.5 lakh properties, they have got 17,000 hotels and 59,000 homes. They are even now tied up with homes, furnished apartments, homestays, all are now rented short stay. Wherever they can get an affiliation for their brand for a rented short stay, they are extending their brand name. And they are now making it as an affiliated property. This is how their business model works. The entire show is managed by OYO. That brings in the revenue for them. When you see the draft prospectus, you can see distribution rights on an exclusive basis. Whenever they tie up with a hotel property, they take up this exclusivity as a clause, wherein that property owner can't tie up with any other aggregator. So the advantage what OYO has got is they have got the price and the control over inventory. This can enable them to maximize their revenue. Apart from that, if you look at their pricing model, that's quite a dynamic pricing algorithm. Based on the demand, the price can be escalated either way. More like a flight cost, flight tariff, what we see. It keeps going up and coming down based on the demand. Something similar they are now trying to work on, and they are already on it. Hotels, homes listed, marketed through OYO app, and they're also quite aggressive online. You can see their presence. They collect the full amount in advance when someone does the booking, and they recognize this as revenue. Most of their income is from this source only. But the reality is, OYO gets only around 20 to 35% of the revenue. Remaining is being taken away by the hotel property owner because they have to run the show. Running and maintenance is being taken care by the owners, so they take away the balance share of the revenue. Top line, remember these figures when you see the top line because they are only getting 20 to 35% of the revenue share. The business model turned drastic in the course of the past 2 years. I can say it took a drastic turn in the past 2 years. Before 2020, they had this concept of no minimum guarantee. That is, whenever they affiliated a hotel property as a part of the OYO kitty, the property owner was given a minimum guarantee, something like a common minimum guarantee in terms of revenue. They agreed to pay a part of the inventory as a fixed cost. That is a major incentive for any other hotelier to get into their kitty. So that was used well by OYO as a good marketing tool to spread their wings across the country. And that worked very well also for the property owners because they were assured of some revenue that became like an incentive for them to join the system of OYO. Irrespective of footfalls, by the time they had this guarantee, so it is more of a win-win. Property owner was happy and OYO was also getting affiliations left and right. So they thought that their business was expanding. And they were able to scale up their business very well quickly as owners got this fixed payout due to this common minimum guarantee. Subsequently, things went haywire. OYO started bleeding due to fiscal commitments. Disputes started, cases were filed in the court, and the worst thing what happened to them was the pandemic. That worsened the crisis for them. This was the major area of concern for them. And what they did to come out of the crisis, they came out with this minimum guarantee that was abundant. And they bought in this revenue sharing model that was introduced, steamed cash bleed temporarily, scale back loss-making operations in China and US. Apart from that, to control costs, they started laying off a major part of their workforce also. This happened, and after that, the past 2 years, revenue plus margins swung so widely. You can just see how that has happened. Revenue tanked 70%. If you see the range between 13,160 crores to 3,960 crores. This was the range between FY 20 and 21. Losses narrowed from 3,120 crore to 3,940 crore. Only a quarter of its revenue is from India. Remaining outside India, that too not directly by OYO, 80 subsidiaries and joint ventures. This is where you have to take a close look at their business model. OYO outside India, they don't have much of control on the model because it is being driven by subsidiaries and joint ventures. Now, the point is we have to see how their global ambition plans out. This is just a fiscal overview. OYO is not on a very strong wicket. We have to make a note of it. Boatloads of debt, untested business model. No other aggregator has come through this kind of a business cycle and a business model, and they have come so long. So we are not able to benchmark standards. The next point is high valuation. For the current status of the business, the valuation is quite high. Our wish is let OYO do well. But if you see the reality, a tall task to live up to this kind of a promise. Now we have seen the OYO overview. This is how we analyze every market opportunity. This is how we analyze every mutual fund in the market, and we suggest our customers to meet their financial goals based on their risk profile and based on the time frame in which they want to reach their financial goal. This is the kind of analysis that we do for every client also, depending upon their financial goal and their income potential and their potential to save. If you want to invest in good mutual funds, please do click on the link given below in the description. We will suggest you good funds to invest as such. If you want to trade along with us, you can open an account. The link is given in the description given below. That's it for today's episode. See you tomorrow with another interesting episode on trading and investing or about a market analysis. Thank you so much for joining us. Bye-bye.